Hey traders, today is Wednesday, November 19th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick update on what's going on with dollar yen. We're coming up on a big level here. Obviously, tomorrow is the highly anticipated non-farm payroll report here in the United States. Dollar yen is coming into a major technical pivot zone. It starts at 156.31, extends into 156.51. You're talking about the reversal close that we made back here in January, and two equal legs off the yearly low, the 100% extension. Now, what's interesting about this is that this weekly candle is threatening a breakout of up channel resistance. Typically, those can be strong acceleration points. So we're looking for a reaction here over the next 24, 48 hours. Here's what it looks like on the daily chart. A nice pitchfork we've been extending off of the October lows is in focus here. You can see that that slope held. We got a monthly opening range break on the 12th that keeps the upside bias, looking for a late month high. Here's the first major hurdle. Now, aside from those two things I just mentioned, there's even more there, okay? The April 2024 high day close right here was one of the largest single day ranges that we saw in over a year in dollar yen. That converges on the objective November high close from last year. And all of that converges right there on that 100% extension. So we're looking for possible exhaustion, possible inflection here. If you're holding long exposure, a good area to start reducing size, bringing up protective stops, getting a little bit more defensive. This is pretty critical. Now, obviously, there's still background information going on here. The BOJ is having a little bit of a tidbit or an argument, you could say, with the incoming prime minister with regards to higher rates and what that would look like. Obviously, there's talks about intervention because of the speed of the move in yen. Look, we can't plan for any of that. All we can do is work on the technical levels. And on the back of this 3-day advance, this now takes us into a critical zone of resistance. Zoom in even deeper. Here's what it looks like on the 4-hour chart on that same formation. Here's the key region that we're looking at. Near-term support comes in at the 155 handle. That comes in right in line with slope support over the next few days. If we close a daily candle above 156.43, next level up comes in right at the objective yearly open. That's 57.18. The next confluent zone of resistance comes along the median line right at the 2025 high day close. That is the day the high was registered. The close of that session gives you 57.70. Now, we're constructive above 155, okay? If we break below this level, it would suggest that a near-term high is in place, the potential for a larger pullback in price. The November open comes in at 154, and ultimately for the bears to regain control, you would need to see a slide below 153. That's the October opening range highs, that October 9th high close, really nice pivot in price. Anything below that would suggest that a more meaningful high is in place, a larger trend reversal is underway. So all things held constant, if dollar yen is heading higher on this stretch, losses would need to be limited to 155. You need a daily close above 56.43 to get resumption of the next leg of this uptrend. Keep in mind, again, those data for the United States, those non-farm payroll figures are on tap tomorrow. We're expecting a hold at 4.3% on the unemployment rate, with a print of about 50,000 jobs. Keep your eye on the labor force participation rate. Might be a tell here as we gauge the overall health of the labor markets. Fed fund futures are still below 50% for the December rate cut. So we're going to see what kind of impact that has on the expectations for the path of interest rates moving towards the end of this year. As always, try to keep you updated on X at MB4X. Till then, best of luck trading. I'll see you tomorrow. Cheers.